The biggest players in the real estate industry, Fannie, Freddie, Zillow, Mortgage Bankers Association, CoreLogic, have all released their preliminary 2024 housing forecasts. And the numbers are surprising to say the least. Especially the Mortgage Bankers Association. They're calling for a recession in the first half of 2024, and you won't believe where they expect home prices to end up. Even Warren Buffett got into the action this year with a big bet of his own. But first, let's look at the major players' updated forecasts for this year, 2023. Going into 2023, every major player, and yours truly for those keeping score, expected home prices to decline. Those actually in the industry, the MBA, Fannie, Zillow, and the Pulsenomics Home Price Expectation Survey, which surveys 100 economists and housing experts, expected a modest price correction in 2023 of -2% or smaller. The banks, Morgan Stanley, Wells Fargo, and Goldman Sachs, anticipated bigger price declines from -4% to -10%. If you ask me, this reflects bankers and investors' habit of looking at housing more as an asset than a commodity. The crash bros subscribe to this thinking too, especially that homeowners will run for the exits as soon as home prices begin to fall. This, of course, is baloney. Especially now, when rents and mortgage rates have ballooned, homeowners will be loath to sell, even if their home value drops 10 or 15 or 20%. And then there's the American Enterprise Institute, a right-of-center Washington think tank that forecasted a 15 to 20% price crash for 2023. Just goes to show you, never trust anything that comes out of Washington. Except for me, I was born in Washington, but I moved out as soon as I finished high school. The average of these original forecasts is -4.9%. Now let's look at the revised forecasts, all published in August or September of this year. All positive. The average of the revised forecasts is +2.8%. That's a move of 7.7 percentage points, or, in fancy Wall Street talk, 770 basis points. Why? Why did everybody expect prices to fall, then revise their forecast to reflect positive price appreciation for this year? The very simple answer is that everybody, myself included, underestimated the effect that higher rates would have on supply. Coming into 2023, we all knew that rates above 6% would have a very negative impact on demand, and it did. The Mortgage Application Index, which shows how many people are applying for mortgages to buy houses, is at its lowest point in 30 years. What we didn't expect was that high mortgage rates would also have a negative impact on supply. These last 2 years have been the first period of sustained mortgage rate hikes after 30 years of mortgage rate declines. And homeowners don't want to sell if, thanks to high rates, their next home might not be as big or nice as the one they're selling. And in 2023, that became a doom cycle, not of crashing prices like in 2008, but of price stability. Fewer homeowners wanted to sell, which meant lower inventory, which prevented even more homeowners from selling because nobody wants to buy a house in such an inventory-starved market. So even as demand fell, supply fell, and pricing remained stable. The latest print from the National Association of Realtors has home prices up 2.8% from a year ago. So what about 2024? Well, let's get to it. Right after you take one brief moment to hit that thumbs up underneath the video. If you like honest, straightforward, no fear-mongering real estate news and analysis, let me know by hitting that like button. I really appreciate it. This summation of preliminary 2024 forecasts was assembled by Bill McBride in his fantastic newsletter, Calculated Risk. Check it out at calculatedrisk.substack.com. It's a great resource. We'll start with new home sales. Fannie forecasts 668,000, the MBA forecasts 752,000, and the National Association of Home Builders comes in between at 731,000. Personally, I'm going with the home builders numbers here as they are closest to the data. Let's dig down a little deeper. So 731,000 new home sales isn't remarkable. It's more than this year or last, but less than 2021 or 2020. What is remarkable, though, is the percentage of total home sales that will be accounted for by new home sales. For 2023 and 2024, the New Builders Association projects that new home sales will make up about 15% of total home sales. That number is usually in the 10 to 12% range. Why are more people buying new homes instead of existing homes? Two reasons. One, new home sellers are able to offer better mortgage rates to keep their products more competitive. And two, there are about half as many existing homes on the market as there usually are, With less existing inventory, home buyers are naturally paying more attention to the new homes communities springing up around them. Next up, existing home sales. We have a range between 4.1 million and 4.4 million, which is historically low. Let's plug into the Fannie forecast to explore this a little further. Existing home sales exploded in 2021 to reach about 6.5 million, then slowed down in 2022 to just over 5 million. Fannie projects will end 2023 with 4.1 million existing home sales and come in right around the same level next year. In other words, this slow, low inventory, high mortgage rate hellhole of a housing market will continue along through 2024. I think that's right, and US demographics agree. We'll get back to the demographic argument in just a moment. Let's tackle single-family and multifamily housing starts together, and then we'll get to the real shockers, the home price projections. So here's the important trend that I'm seeing in housing starts projections. The National Association of Home Builders sees single-family starts increasing and multifamily starts decreasing. That means they expect single-family home construction to increase and multifamily apartment building construction to slow down. The Mortgage Bankers Association sees the same trend and extends it into 2025 as well. Fannie agrees with the slowdown in multifamily starts, but is an outlier in thinking that single-family starts will slow down too. The majority opinion on this one makes perfect sense to me. Multifamily starts hit a new high this year, and with so much inventory coming online, it makes sense that builders are going to slow down producing additional inventory. Single-family starts peaked in 2022 before cooling off in 2023, but have recently been coming back. Look, we have a housing shortage in America. I harp on this all the time. When you look at America's population by age, demographics time, you see two large groups, two humps in the graph. This hump is the millennials. They're in their late 20s and 30s. There are about 72 million of them. They collectively own about 18 million homes, and they want more. They're starting families, settling down, accumulating savings in the bank, and they want houses. This hump is the boomers. They're in their 60s through mid-70s. There are about 69 million of them. They collectively own about 30 million homes, and they're not ready to move out. And when I say move out, I mean die, move in with caretaking family, or move into assisted living. So we've got a conundrum. It could resolve itself in 5 to 10 years when most millennials have settled for some suboptimal home arrangement, thus lowering demand, and boomers are finally old enough to start leaving their homes in a meaningful way. But in the meantime, the only hope of a solution is to build. That's why Warren Buffett invested over $800 million into 3 home builders, D.R. Horton, Lennar, and NVR, earlier this year. A lot of crash bros like to characterize home builders as these hapless behemoths walking blindly toward their demise. But if Warren Buffett is thinking differently, well, I'm sticking with Warren on this one. Most large home builders are currently figuring out how to build less expensive entry-level homes. This is the supply America needs right now. And while the private sector economics of it are very tricky, at least one investor is willing to bet $800 million that home builders will make meaningful headway in figuring it out. All right, finally, drum roll please. The preliminary forecast for home price appreciation in 2024. CoreLogic comes in at 3.4%, Fannie's at 2.8%, Freddie calls for 0.8%, the Mortgage Bankers Association is looking at 1.1%, and Zillow, ever the optimist, is seeing 4.9%. Okay. What are the takeaways here? Firstly, no major player is calling for home price declines in 2024. I don't really buy Zillow's projection of 4.9% growth, but it's notable that nobody expects home prices to be in the red next year. Secondly, and this is what shocks me, the Mortgage Bankers Association is calling for a 1.1% price gain in 2024. Why is this so shocking? Well, the MBA is also calling for a recession in the first half of 2024. How can we possibly have a recession and home price growth in the same year? Well, the answer is we can, because historically we have. More often than not, actually. I go into the historical data showing the correlation and lack thereof between recessions and home price drops in this video. Definitely check it out and subscribe for more thoughtful, honest housing market analyses like this one.